Well, good morning, everybody. I hope everyone is well and safe in these difficult and testing times. Firstly, thank you for joining us for the Payments Day of the SBC Digital Summit. The fact that we're actually holding this digitally highlights how much things have changed in just the past few months. This applies to all areas of our lives, but today we hope to shed some light on how it's affecting the payments in the gaming industry. Just like many industries, the gaming industry is certainly facing a crisis. People's jobs are at risk. Many casinos and racetracks have had to unfortunately close, but obviously for good reason. This gives us a potential way of taking advantage of the nascent collaboration between the online and the offline gaming industry, and allows us to showcase how responsible operators are. We're going to be discussing some of the latest technology and innovation, paying particular focus to registration through biometrics, which enhance security whilst removing friction. I'm actually personally looking forward to this. However, whilst we do pay special attention today towards conversion and player experience, we will equally be paying attention towards responsible gambling and affordability. With many more digital consumers at home, are we doing enough to ensure we remain responsible? And are we equipped to, technologically and operationally, to check our players' source of funds and affordability?
The puzzle is about who's actually controlling an account rather than just merely about identity. And that is critical. So this is where you have someone who, say, self-excluded themselves, but they're trying to make use of, say, someone else's identity, say it's a partner or a friend, in order to sort of bypass these types of checks. And this is somewhere where AI can be very useful.
But actually, if you've got a customer that has always, for example, has always bet on the Premier League only, and then the Premier League comes back twice a day and they're spending the same sort of money that they would normally do, then really has their behavior changed just because it's happening a little bit quicker because there's more condensed time. And then if they then, once the Premier League is done after 5 weeks, then hibernate and come back when the Premier League starts again, then their behavior hasn't necessarily changed. I think that,
people like Stephen and Rahul, they just wish they would have the same information that a money lender would have, because it's just such an easy decision, right? It's like, okay, this person, he's got 3 loans, his disposable income per month is £800. So obviously then it's a really easy decision to make. Okay, then I'm just going to set the amount that they're playing with at this and this point. But until we don't really sort that out, then you always going to need the human to essentially help with decision making.
We like responsiveness. I think it's not now the big fish on the small fish. It's all about the fast fish and the slow fish. If I'm sending an email to my banking partner and it takes 3 days for him to answer me, and then he needs to pass it and shift it between people in his organization, that won't work. The banking partners that we choose, and we choose it for the clients, has to be fast, has to be efficient, and has to be responsive and creative. And I want also transparency. If money is blocked or money is there isn't a compliance checking on something, we need to know. We need to inform the clients ASAP.
Assets started to gain value a lot. So fintech companies emerged, and everything happened in the last last 10 years. Why? Because people began to fail to lose faith in the traditional banking financial system.
Hopefully, through the registration channel and then deposit, etc., client, and you already have some product out there today outside of the bank system, where client would deposit and verify himself at the same time. So suddenly you have a client that's online, he managed to register, deposit, get verified, and then boom, he's one of your clients.
About 50% of the full-time employees in the UK, they receive less than £29,000 per year, which basically is a relatively small amount, which emphasizes the fact that you must be very, very careful when you are onboarding players and allowing them to spend a lot of money with you before you even know who these players are. So who they are obviously connects to the KYC part, but also can they afford playing with you, especially when you don't know who they are in such a short time. And
I would love to have the approval of the KYC of that player through any of the e-wallets we use for ourselves, because somehow before they are using any of the payment solutions we have, the player has already been passed through them. It's true that it's not the same regulation, it's not the same license. They are financial, we are gambling operators.
From a supplier product perspective, there was a bigger range of data that could be obtained basically in the background. Also from a GDPR perspective, obtaining a consent and some checks, and then investigating further without making the player busy and without pointing the player to that we are investigating would the course of business quite a lot.
To get something to go mainstream, you've got to get the buy-in of the big players, and the perception has to be there. If you talk to a bank about crypto, the first thing they think is you're doing something dodgy. And so, although yes, you can reach out to the individual players and help onboard them and teach them, one of the things that we have to do is also start referring to this as a legitimate product.
Not only Bitcoin, guys, Bitcoin doesn't work for small deposits. Let's be honest, right? A lot of deposits are like below 100 euros. The fee for the customer to send you Bitcoin from Binance, from any other exchange, would be $2, $3, $5. They cannot afford to send you a deposit of 100 euros. I don't say that you need 20 blockchains, right? Just select 4, right? Bitcoin, Ethereum, BCH, or the BSV that the bank is saying, right? And Litecoin. Do 5. This would be more than enough, but then when the Bitcoin network is clogged, and this happened in the past, it can happen anytime, right? Your deposit method will be off, right? It will just not be working because Bitcoin is not scalable for payments. So just do few of them.
We know when they come to the casino that this customer has been authorized to play. They've passed the checks we need to pass and they can play. If they go to any other casino on our network, because that information is on an open ledger, which is the blockchain, and it's immutable, it cannot be changed. We know that if they went to any other casino that they can play. So if there's open networks of information around, people that agree that yes, these are the identity checks that we need, or this is a responsible gaming check, we know this person hasn't self-excluded, or we know that this person's been through an enhanced AML process, we know that they can play. So the blockchain can provide lots of benefits actually for regulators.